Good evening, traders. Welcome to our session today. My name is Mathew. I'll be taking you through pending orders and how you can use it in straddle trading, especially when we have news. Already, I see I have a question on the screen with Waziri. You're asking where we put pending orders. So we want to cover them little by little. First of all, look at pending orders, different types of pending orders. We talk about how to use them or where to put them when you're trading, especially when you have news. Okay, so what we are used to normally is the market orders, where you just place and you enter a trade in the market and it goes on running. That is a market order. Apart from market order, then we have pending orders. That is where, just like the name suggests, you place a trade, right? But then it doesn't get executed immediately. You have to wait for quite some time. It remains pending in the markets, waiting for execution once the price reaches there. So I want to turn on to, let me share a whiteboard. So I give you a few examples on what that one is and how you can utilize it. So let me know when you can see the whiteboard. Hey, Emek. Hey, Waziri. Yeah, we have FOMC. That's why today we are covering, before the FOMC comes up, we want to see how can you use the pending orders to get your trades in the market. So I want to share my whiteboard. I know you can see it right now. So let's discuss these different types of pending orders. There is so a pending order is where, for example, let's say the price is somewhere at this point. So then you're going to place your trades a little bit further, where you're expecting them to open once the price touches there. Let's say, for example, the price is moving up, like my arrow is showing there. So you can decide to have your trade entered once the price reaches that level, that line which I have drawn at that point. Okay, so there are two different ways. If you're expecting the price to break to the upside and keep moving farther away from that level, then that pending order is going to be a buy stop, right? If, for example, the price is at that level and you expect it to move further down and then break past that level, and then we keep on with the selling, it's going to be a sell stop. So for you to understand it easily, you want to know, just let's learn it this way. Above this point, if you expect the price to keep on going higher, of course, you're going to enter a buy. If from this point you're expecting the price to keep on going lower, then you're going to do a sell. So we want to see how we can combine these names so you can understand it much easier instead of cramming. So where you're expecting the price not to stop at this area, but keep on pushing higher and higher and higher, then you're going to have buy stop. So it's going to be a buy stop order. Buy stop. Right? So if you're expecting the price to move further down, fails to stop beyond this at this point and keeps selling, then it's going to be a sell stop. A sell stop. So when you want to enter your order, you realize you have different options, okay, on how to enter your trade. So if you expect the price to break a certain level and keep moving that direction, then it's a stop order. Sell stop if you're selling. If it's the upside, it's a buy stop if you're buying. The other scenario is where you have a limit. If you expect the price to keep on going higher, hit that level, but fail to go beyond that level, right? Start moving to the downside. You want to believe this is the limit that the price will reach before it starts moving to the downside. So going to have a sell limit. Sell limit in this case. So you expect the price to hit that area as the highest level possible, then start moving down, you have a sell limit. If you expect the price to move to a certain level, fail to move past that level, start moving higher, simply you're expecting this to be the lowest limit, yeah, or the lower limit that the price is gonna hit, and then start buying. Then you have a buy limit, like something like that. So these are the scenarios which you're expecting. If this is the first scenario, then you're talking about buy stop. Second scenario here, then you're talking about sell stop. The third scenario, then you're talking about a sell limit. The fourth scenario down here, then you're talking about a buy limit. So this is what you expect. Remember, you are setting that level before the price hits there. In other words, a buy stop is where you want to set your trade to open above the current market price, but in that direction. So sell stop is where you expect the price to open a sell order below the current price action level. Just like that. Sell limit is where you expect or you want to enter a sell order, but above the current price limit, the current price level, sorry. And for a buy limit, so you want to enter a buy trade, but at a level below the current price. Okay. So with these examples, let me take, maybe I can allow you 1, 2, 3 seconds. So you can take a screenshot, for example, if you want to know what that sell limit is and what you expect. Right? You can take a screenshot, take a photo of that so you can have it with you, so that we move to the charts. So let me explain something before that. So when you're expecting, for example, when you have news and you want to use the pending orders to trade, sometimes you have the price playing around this level, but you expect the price to shoot very fast, maybe to this level. And once it reaches there, that's when it starts to move down. If you expect something like this, you see, it's very hard to catch that fast movement. So this one means that from this point, the price might spike to this area, and then you start selling from this level. Then you're going to set a sell limit. So you set a sell limit order, then you have your SL at that level, for example, then you set your TP down here. Okay. Instances where you expect the price to push down all the way maybe to this level and then starts moving up, right? Because the news pushes the price quite far. Then you want to have your buy stop, right? Buy stop this area. So these are the scenarios that if you anticipate, then going to have your orders expecting them to be taken, as we're talking about. For the stop orders, like buy stop, is where you expect the price to hit that level and keep moving higher, right? Establish a very explosive move, keep moving high. But you don't want to buy at that point because there is a likelihood of the price pushing the downside. So you want to have a buy stop, and the same case, a sell stop. Now, having explained that, let me move to the charts. Let me now share my screen. So we look at examples on the chart. Just a second. All right. Tell me once you're able to see that. And we are pursuing this this approach of trading with pending orders in line with the news. Today, if we check the economic calendar, which I will place here as well so you can see it. This is the economic calendar, Forex Factory economic calendar. You realize there are several news which are scheduled to happen. Like, for example, today, around 3:30, let me know when you can see the calendar. Still waiting for it to load. Yeah, you can see the calendar. So at around 3:30, you see we had a high impact event for the core PPI, core CPI. That is an event which shows the inflation on the side of the producers. Yeah, the level of prices that the producers are marking up their goods once they produce them. So you can see it came up much stronger, much higher than I think the last 14 months or so. Yeah, it's really came up much hotter. Okay, it's one of the big moves which has been witnessed for the past 14 months, right? So it was quite a big move, although there are other events which are coming up once you have two events coming up, like for example, you have the FOMC meeting minutes coming up, that is what is going to strengthen what we are seeing. That's going to give like a conclusive view of what might happen on the USD, right? Because we have all these events coming up for USD. So when you have such events, you have explosive moves which come up, and you might want to get those moves, right? And you don't want to have your trade, a market order at that point, because what if it just moves opposite of your view and you had placed your trade the other way? That's why you want to understand the pending orders, so you can have your trades on, and then we will look at different approaches. Now, we have FOMC coming at 9. We don't know how it comes up, but how the minutes come up might cause a bullish move or a bearish move. Now, let's go to the chart and see how to place those orders, how to select them, and we see whether you can get an idea on how to trade the events which are coming up. Right? So straight on the charts, and you want to make sure that the event which you're looking for is in line with the instrument that you're trading. For example, here we have gold XAU USD, looking at it on 5 minutes. Now, when you're trading with news, if you want to follow the trend, for example, and you know what to bother yourself with those big moves, please observe your events from a higher time frame, because on a higher time frame, the candlesticks don't seem, the candlesticks just move exactly to the places where you have the trend, or to test the trend, or to your key level. So you don't really find a very big move. But if you want to trade exactly at that time when the news is being released, yeah, that one means that you have got a very high risk appetite, then go to a lower time frame. That's why you're going to find a very big candle moving up or down. So let's say, for example, we have gold here and the news are coming up, and you are expecting, let's say, dollar to be very strong, to strengthen very fast. And if you want to see that, let me give you another tip. You want to look at the dollar index, okay? Specifically, if you're trading something with dollar, this can be gold USD, GBP USD, right? Or Euro USD, okay? And we've said move to a lower time frame, for example, on all of them, 5 minutes, let's say, right? 5 minutes on GBP USD, Euro USD, but you must have analyzed your market. You know what you're waiting for, all right? So in this case, it might be tricky within the split seconds of the 1 minute that the time that the market reacts. It might be tricky for you to wait and analyze the market and enter your trade. So you want to check on the dollar index. Okay, let me show you how to look at the dollar index, or maybe you know, but let me have us all of us review it. So just go online and search DXY, or you can check it on our platform as well. We have it, but the easy one is where you go on Trading View. Okay, just go search. Like for example, dollar index on Trading View. Okay, and what happens once you select that one? It will take you to this website here. I hope things works faster for us. Okay. So I'm having questions here. Someone asking whether what is a pending order. I think I explained that one. It's an order which you place in the market, but you're waiting for it to be open later, not at that time. So there's pending order and there is market order or instant execution. So instant execution is where the order which you place in the market opens immediately, or you just place it that it opens immediately. Right? Let me make my chat bigger so you can see. Another question from James is, are pending orders the same as order blocks? No. Pending orders are just orders that you're setting on the market. It's just like the opening a buy or sell order. So it's just waiting to be executed. That's what a pending order is. Emic asking, what if you place a sell limit, then it surpasses with a peep? What will appear? So what happens, even if it surpasses with a peep, it will be opened. Remember, you'll have a stop loss as well. So as we'll be placing those pending orders, we will see. But for pending orders, you still have to place a stop loss and a TP. The only difference between a pending order and a market order is a market order enters directly into the market, but a pending order will wait. But the way you have a stop loss for a market order is the way you have a stop loss for a pending order. And also, Elvin is asking whether dollar index measures inflation. No, not really. Dollar index doesn't measure inflation. Dollar index is a measure of the strength or weakness of dollar compared to a basket of other currencies. We have GBP, Euro, USD, Euro, sorry, there's JPY, there's CHF, and several others. So it just measures how strong that currency is. Now, without going so much out of topic, I just decided to answer a few questions. If you click on the dollar index DXY chart, right, you'll be able to move straight to this chart. But what you will see first is a line chart. You have to click see on super charts, right? Click see on super charts. That will help you know how the news has come up. See on super charts, and of course, you can see whether there will be a spike or what happens. Of course, you expect a very big spike around that time. Okay. So I just wanted to show you how you see the reaction of the news if you do not want to go and start analyzing whether it's a good news or something like that. So going back to the charts, let's look at how you set the pending orders. If it is on the laptop, I wish I would be able to connect on the phone. So I show you. I will try that towards the end. But let me show you on the laptop first, as I'm explaining. So this is where you set the pending orders where you're expecting at the current price level, where it is playing, you are expecting your order to be opened at around that point. Let me use a thick line so I show you. Thick black level. Let me put red, for example. Make it a little bit thick so you can see. So you're expecting this price to drop all the way down there, and then that's why you have a bullish move starting, right? Look for lines I can mark. You're expecting the price to push all the way down here, then you have a push or a bullish move starting from this level. So in this case, you place a pending order at that point, all right? If, for instance, you're expecting that the price instead will push to that high point there, and then it's from that point where you're going to have maybe the price starting a bearish move, all right? A bearish move to the downside, then you place your pending order at that area. Okay, so a pending order will be away from the price. The current price is playing around this area. So let us now look at the different scenarios that you expect. The scenario, the first scenario you're expecting, I was just about to mix with Swahili, scenario ya kwanza. The first scenario is where you might expect the price to hit that level and keep pushing to the upside, or at the same time, hit that area, reverse, or keep pushing to the upside, just like he said. All those you put a pending order, or on the flip side, on the lower part, you expect the price to hit that area and keep pushing lower. So these are the different scenarios you're expecting, and that's why you're entering your pending order. And you know, or what you're expecting is the price will move quite fast, and you don't have time probably to enter your trade. So if you are expecting, I don't know whether I can put numbers here, so I can explain much better. Just a second. Yeah. So number one, I want to label that to number one. So scenario number one. If you're expecting that move, then you want to set a buy stop. You expect the price won't stop at that area. it will approach that level and pierce through that level and keep moving higher and higher and higher. So in this case, you want to have a buy stop at that level. So what you do is you will go to the, or you can just take your cursor to that level, then you right click, then down on that point where you have trading, you can just automatically click and you can see there are two options there. Sell limit, buy stop. Just helps you to know. Right click at that point where you want to enter your trade. Once you right click, then just right at the top, below it, you have a sell limit, or you go to the trading session, you have the sell limit and buy stop, right? So you need to have set your stop loss before that, right? For example, here I'm seeing sell limit or buy stop, and it's showing you arrows. The red arrow showing you if you place a sell stop, then it's where you expecting your trade, or you're expecting your order to be filled to the downside, right? Buy and then move down. Buy then move down. It's going to be a sell limit. So if you click that, right click that point, if you go to the trading session, you can see the first option there is sell limit. So you expect the price to hit there and keep selling. On the flip side, buy stop, showing you an arrow to the upside. Should be very easy, showing you an arrow to the upside where you're expecting the price to break that level, keep moving up. That's a buy stop, right? So our first scenario, number one, what you're talking about is a buy stop. So you can see there's a lot size there. So if you're going to use this option, the first thing you want to do is make sure you set the lot size. You can see for me here, it's showing 0.01 because on the trading panel, it's on the right, on the trading panel, it's written 0.01. So if I wanted to do a 0.1, then what I would do here is come first here and set 0.0. Okay, 0. Let's say 0.5. Once it's set at that point, if I go at that specific point and right click, you see now it's reflecting sell limit 0.05. So looking at the scenario number one, if I do buy stop, you can see I have my order. It's written buy stop, right? It's showing buy stop. Then I have to click on it, double click. Once you double click, you will have the section, this pop-out window where you can set now your stop loss, right? Fill in your stop loss at that point. The other option that you have is where you just go straight away to the new order and then select pending order. And then you have to select the type of order. That is the easiest which I've shown you. I'll still show you the other approach. So fill the stop loss. For example, you want the stop loss to be at 18.75. So stop loss 18.75, right? And TP, maybe you're targeting 18.80. 80. And then click modify. Now you can see we have our pending orders. You can change a little bit to have the risk reward which you want. So we have our pending order that will start from this point for scenario number one for a buy stop. Okay, so you have it pending though, so that once the price hits there, then it will push to the upside. That is for the buy stop. So for the sell stop, you just let me show you the other way. So go to the new order section. So if you go to the new order section, that's where you will set everything from scratch. So you have to specify where do you want. First of all, we have market execution on the type. I hope you can see that point on the type. Let me wait a little bit so I see exactly. So there's that point. You have symbol, then down there you have got type market execution. If I click that pop down menu, there's a pending order. So the moment you select pending order, then you have buy limit. That point where you have type, you have various options which opens up for you, right? So if I click on the point where I have got buy limit, that option, you can see all those others. There with MT5, there is even buy stop limit and sell stop limit. We won't discuss that one today. Let's work with the basic ones. So buy limit, sell limit, buy stop, sell stop. So for you to use this option, it means you need to understand exactly the type of how those orders work. Okay, you need to understand exactly. If you don't understand how these ones work, then you want to go and right click at the point where you want to enter your trade, right? Have that pop down menu come up, then just right at the top, below it a little bit, you have the trading section, which shows up. Let me know whether you can see it. Yeah, that trading section comes up and you can see up sell limit, buy limit, sell limit, buy stop. That's when it's much easier to understand. So with this one, you have to fill the lot size, fill the price, where do you want to enter your trade. For example, let's set as a sell limit, which is going to be our scenario number 2. Let me try scenario number 2 here. Let me change this to 2. Right, properties. That's our scenario number 2. Yeah. So let's say, for example, we want to enter sell limit. So at that point, you have to read the price. This is a little bit more manual. Go read the price is 1876.74. So you come here and say the price is 1876. What was it? 74? 0.85. Let's say, for example, 0.85. Right? Go back and read the stop loss. Or maybe you can decide to enter the trade, then you'll pull the stop loss levels. But why not we not set right now? Stop loss, maybe I'll have it at 1877.33. So stop loss, a little bit more manual. 1870, let's say 77 point maybe 44 or 30. Then take profit, maybe 1871. Yeah, 1871. And then if they are properly placed, then your trade is going to be executed properly. I don't know where I've made a mistake. 1877 point. So stop loss. So my entry. So in this case, maybe it's not enough. I've taken a stop loss which is much closer. So I've said, let me enter that point. 76.85. Let's say 78. 1878. The reason why it's not going through is because I've selected the wrong type of order. And that's why the place button is not active, because here it's buy limit. And for number 2, that type of a scenario where you want to sell above the price, it's supposed to be sell limit. Okay, that's why I said if you have to use these ones, then you have to properly know understand them. Okay, like what type of move you're expecting. So let me change it to sell limit. That's the highest limit, and you can see the button has become active. So I click sell, and you can see my order has been entered at that point, right? And the take profits down here. It might be confusing because you have got 2 orders, and you might not know which one is which. Okay, so you can as well adjust them the way you'd want. So if you want to understand it better, let's have it that way. Let me pull this one lower. That is how it is easier if you're using a PC. Okay. Let me see if we can move it a little bit. So the prices have changed in this case, but I'm trying to see how it can be easier. So each one has its stop loss and TP. And you can see for every order you have to place the stop loss and the TP. So I think it's much easier that way. Order number 2 has a stop loss and TP. Okay. And if we check all the way to the left side, you can see sell limit, that one, and then the stop loss and TP, buy limit, buy stop that way. On the lower end, that's the same case, you'll have it. So let me maybe place them on this level so you can see, right? So you right click. No, let me place them much farther from the price, because now the price is there. So maybe I'm expecting the price from this point, it will push the upside. Right click, click on the trading. It's gonna be buy limit. Place the trade there, then right click. This is the easier way. Right click and You can place your stop loss, maybe 1866.8, right? Then take profit 1872, for example. Then you modify. That's what you have. Stop loss, and then you have got your buy limit at that point. If it is a sell stop, then you just right click at that point as well. If you expect the price will keep pushing lower below this level, then you can place your just right click and close to the top, then your sell stop. Double click, you go and select, have to place your stop losses just the way you do them on a market order. Maybe stop loss on 1867, 1867.5. Then TP, maybe 1860. So I have just shown you different types of orders which you can place, and you can always grab them and modify them the way you would want. Okay. It might be a little bit confusing when you're looking at the chart that way, but make sure you understand. Now, I want to remove all these orders. That is how you can place these orders in the market, but I want to remove all of them and then discuss how you're likely to place them when the markets are, when the actual time comes, and that's when the news are coming up to be released just a few minutes away. Okay, and specifically the straddle strategy, which was already displayed on this, on the title of this webinar. These are different types of orders that you can enter, right? Depending on what you're expecting. If you expect the price to push all the way far and then keep pushing that way, it's going to be a stop order, a buy stop, or a sell stop. Like in this case, we have a sell stop all the way down here, right? Expecting the price to push below that one and keep flowing down and down and down, sell stop. The scenario number one, which we had, expecting the price to push past that area and keep buying and moving higher and higher. Then these others are limit orders. Now, that is the explanation for those ones. Now, let me go to pound USD, away from all those, but let me remove these orders first. If you set these orders and leave them that way, by the way, they might be executed. So if you didn't have use for them, just remove them, okay? Because you might leave an order that's executed when you did not need it. So remove them. Now, let me remove all these things. And then we talk about the straddle strategy. A straddle strategy is where, because okay, a straddle strategy is adopted from options trading. Options trading is where you might have a put and a call at the same time. Okay, they are called put and call. Like you have a buy and sell order at the same time. So in this case is where you have the price ranging, and the way it makes sense in trading Forex and these instruments, where you have a price ranging, you want to establish a range first. Like in 5 minutes, you want to establish a range. For example, before the news release, like 10 or 15 minutes, there's a range maybe within these levels, and it's not being broken. Okay, it's not being broken. The price is just playing within there on that part. And you're expecting, once the news are released and the price decides to push or takes direction, okay, you are expecting an aggressive move past that level all the way up, right? Or if that one doesn't happen, then the flip side is, so it's more of a not you're not very accurate about what you're expecting to happen. But of course, the news push us to do that, because most of the times, even if it comes good news, we've got a very big move to the downside before we change the upside. So in this case, you expect also the price to push all the way down aggressively. So at these levels, you're going to have a sell stop on the lower part, expecting a very big push to the downside, and a buy stop on the upper part, right? So let's set those ones, and we might want to see what happens, okay? The disadvantage about this type of setup or this type of strategy is that you're kind of like gambling. So it's not so good. But if the price takes one direction and moves in that direction, especially when the news are not mixed up, then it can be very rewarding, right? But if you want to take the approach of a risk-averse trader, you don't want to mess up with the news. You might want to wait for the news to come up fast, see the trend, and then you later come to react. Then this is not your thing. But let's assume that you are a trader who is who has got a very high risk appetite, okay? And you don't mind being in the markets that time. You're looking at the opportunity. Okay, so let's go place our market orders, our pending orders. So you just take the cursor, just move to the level you're expecting to place your trade, maybe several pips away, let's say 10 pips away, right? At that point, make sure you set your lot size, maybe 0.05, but around the news, you want to be careful with the lot size as well, just in case things go on the flip side, because the things you are dealing with during news is slippage, right? Slippage is where the price that you wanted to have your trade executed is not available anymore. Okay, so set your lot size. You want to do a buy stop, place your trade there, then set the stop loss. You might want to have it very tight, but again, with the news, might have the price not move very fast in your direction. Pull back a little bit before moving in your direction. Might execute the trade, then move in the flip side. So let's say you do a stop loss, something like that. Then you set your TP much further, or you set a trailing stop, right? You can decide to set your TP or set a trailing stop. So in this case, you have your stop loss a little bit like 10 pips away, then you have your take profit, maybe to the top, if you're expecting the price to go and test that top level before pushing to the downside again, or before that move is done. That is a buy stop. Okay, so for it to be a straddle, we set another order sell stop on the lower side. So sell stop, and also make sure you place your stop loss, right? Very important. Always, if you decide to trade with the news, have a stop loss, my friend. It will save you. Okay, then take profit on the lower side. And again, it has to be a level which you're expecting the price to move. And mostly look at the key levels. The price smashes that level. Where do you expect it might move? Maybe to a gap or to the next key level, maybe 30 pips, again, depending with how you understand that instrument. So in this case, we have got our prices, our levels set, okay? And you just want to wait for the price to approach that area, and from that level, you expect your trade to be executed. Where was our trade? Sorry, what happened here? So that's the level you're expecting. That is the gap which you're playing around with. And you don't just identify, you don't just decide this is the levels which I'm going to place. You want to use the market formations which you're finding. For example, this is the consolidation. If the price decides to maintain this consolidation, for example, before the news, this one here, where did I have my where is my line? Yeah, from this level, this is the level which we're looking at, the level of consolidation. Then you want to have your pending orders a little bit above that level, buy stop above that level, some pips above, then some pips below that level. You want to have a sell stop, and you're expecting these type of moves. So that's how the pending orders can come in handy. If, for example, you do not want to take a gamble with these ones, then you might want to wait for your trades from the top. Maybe you have a key level. Let's say, for example, you have an order block. Someone mentioned order blocks. You have an order block at this point. I don't know whether you have any. Maybe you can check on 1 hour. I don't see any at this point. Yeah, we have this area of interest. Okay, but let's not speak about that one right now. It might not work. Maybe you're expecting the top part to be taken out, right? This top part to be taken out. Once it's taken out, the price to flow to the downside very fast. Then that's why you might want to have your sell stop, all right, or buy stop, sell limit, sorry, or on the flip side down here, might want to have the buy limit, right? But again, even if you want to use these orders, you want to analyze the market. So you know the targets which you're having. All right. And for straddle strategy, this is what we have. So it's like you have the price caught up in between this level, all right, and you're expecting an establishment where the price pushes aggressively to the upside, opening or trades, running with it. But now let me explain the disadvantages of this one. What is likely to happen because of slippage and the fast movement of the prices? You might not have your trade executed exactly at that point. It might jump all the way up here, all right, because of slippage, and you wouldn't get the best entry. And people will say, oh, it's the broker or this broker or this broker. The thing is, if you are trading with a broker who is offering you a real market, don't read too much from this. It's offering you real market, okay? You're trading on something virtual, you're trading on real market. Then, of course, the actual scenarios you're expecting to have slippages in the market, you're expecting to have very fast moves, gaps in the market, all right? Because that's the real market. Because when the news are just about to happen, everyone wants to play safe. The banks want to wait a little bit, right? They don't want to be at that market because prices can change very fast. And what happens around that time, you've got a little bit of a confusion within seconds, or even maybe seconds, few seconds to a minute, and that one might cost a lot. The spreads widen, okay? The liquidity a little bit might not be there around that time. Why? Because everyone is playing safe, okay? So if you do not want to have the disadvantages of those slippage and widening spreads, then you need to wait up until the markets stabilize. After the news, of course, you get an opportunity to trade. Now, we came up with this topic of discussion today. It's in line with the FOMCs coming up. The fortunate or unfortunate thing with the FOMC minutes might take some time before the market decides on the direction to pull, all right, as compared to where you have a number just being dropped. Like, for example, where you're expecting a number to be dropped, like what is the core PPI number? It comes up like 0.5, 0.3, like you can see on the screen. So with this one, might take some time, right? So as well, the straddle strategy might work when you have events that are going to release a figure, and that figure shows strong dollar, weak dollar at that exact time. With the minutes, we have to analyze statements. There's no number which is being released. We have to analyze statements. We want to understand whether the members are they dovish, are they hawkish? That's what gives direction. And for that one to take shape, then might take some minutes. You might not have an explosive move at that exact time, right? And that is what I wanted. That's the connection I wanted to have. We connect between pending orders, right? What those pending orders are, and when is the best time to apply them when the news are coming up. But again, you realize that you have a decision to make in terms of your risk appetite and how you're going to manage your risk. During news, because you're expecting a big movements in the market, it's always good that you play safe, right? But of course, where there is risk, there's an expectation of high reward. And that is why we still have we traders interested in this type of a strategy, right? So what happens if, for example, this trade takes a bullish move, a bullish push to the upside? Once this buy order is executed, you want to remove the sell stop very fast because it might move to the down. This is one of the disadvantages of trading this type of strategy, where the price moves up, takes that order or opens that order, it's running, but before hitting the take profit, pushes down again, hits the stop loss, moves to the downside, opens the sell stop, pushes up again and hits the stop loss. So you have your stop loss being hit, both your trades hit a stop loss because the price has just done, I don't know what we call it. It's just moved up and down, right? It's just whipsawed, right? So you want to be careful about that. Another way is just have a trailing stop. A trailing stop. How do you put a trailing stop? Right click on the trade if you're on the laptop, and of course you can do a trailing stop, the automatic trailing stop on the laptop. So just move to the trade which you've entered, the buy stop, right click, and then just on those options, there's modify, there's delete. You can actually decide to delete that order if you change your mind. Down there, there's trailing stop. Click on the trailing stop, and you can select the number of points. Like enough with FX Pesa, we offer you a trailing stop of up to 5 points. There are brokers who only allow you up to that, only 30 points minimum. So it means your trade has to move like 3 pips for your trailing stop to start moving. So this one you have up to 0.5 pips, and your trailing stop takes effect. And this is very important for those who know. But the advantage of this one is that a very small move, you are already protected. All right, even a 1 pip move, already you have your trailing stop working for you. But for some there are other brokers who maybe need you to have your trade go all the way to 3 pips, and you know that one is the smaller the better, okay, because you're trying to manage the risk. So select the amount of stop loss, the points you want, maybe let's say 10 points, and in that case, if the price moves a little bit above this level, then it starts counting. Your stop loss starts moving to the upside, following the trade. If it pulls back a little bit, then you are out of that trade. Okay, so that's one thing you want to do. Again, on the sell stop, right click on it, do a trailing stop, give it like 10 points. So if this trade, by any chance this trade is taken to the downside and the price moves even 1 pip, then your trailing stop, the stop loss starts to follow the price very fast, and you are a little bit protected. The only problem is, again, the spreads will widen, okay, because of that news event, whatever is happening. What happens around time is might have big orders and which are being entered around that time, and that's why you have the widening of the spread. So orders might get filled across several price levels. All right, think of when you want to buy 1,000 lemons, for example, or 1,000 boxes of, let's say, cups, 1,000 boxes of cup, and you've got several supermarkets which are selling. The chances of you getting 1,000 from one supermarket is not viable, or might not be possible. So you get your maybe 500 filled from one supermarket, then you have to get the other 200 from another supermarket. You realize what the price you got on one supermarket is not the same as the one that you get on the next supermarket. So let's take that one as a big order being filled in the market, and it has to scrape through the available prices. So you see a big order scrapes through the order book, the spread widens a little bit, right? That one is something which is likely to happen when the news are being released, and you can't avoid that one, especially when you're dealing with a real market. So that's that. We have pending orders. I hope you've understood how to do it. And in the next 1 minute, we'll have the FOMC minutes being released. I don't know whether we'll have a fast move, whether the price will react very fast. Remember, you're on a lower time frame, like 5 minutes. Let's wait and see what happens. Again, it might push aggressively to the upside or downside. All right. If it happens, then we take one order out and we have our trailing stop working for us. Another thing is we don't know whether the price will react that much. So let's wait and see. Okay. Meanwhile, I'll be taking questions, and Nyamari is asking, how do you sell a trailing stop on the mobile phone? For the mobile phone, especially on the MT5, is where you have the what do you call it? You can move the stop loss by just grabbing and moving it. You see that? That order has been taken. So that is the disadvantage, is going back to the stop loss. It was too tight. See, It's taking that buy, moving to the stop loss, but you see, it's gone. Right? That one is gone. But imagine if it has decided to spike to the upside, right? Could have taken something. So it's gone very fast, very fast. Okay. So for the phone, you have to move manually. You have to move manually. If we had another pending order here, I don't know whether it would work that way, although you don't want to do something like that. Buy stop, set a stop loss to the downside, something small. Set your TP up there. If the price decides to push very fast to the upside. Here we had a very tight stop loss. It didn't work out. It was taken, but with markets, you want to be that careful. Right. So any questions we have? We've been doing this. We've had this session for quite some time now. It's already 9. Seems the market's not reacting that fast as we were expecting. All right. There are times where you'd have a very bullish candle up there, right? Almost going to heaven. Seems this one has not moved quite fast. So once you see such a reaction, it's not happening very fast because you want to take advantage of the fast volatility which happens in the market. Then you want to wait for a normal setup and enter your trades. And that is how you could use pending orders in the market. All right. So, ladies and gentlemen, that's what I had for you today. Let me remove these pending orders before we go. All right. So FOMC is here. You can set the pending orders and see what happens. Here we have minutes that you're expecting to be analyzed, right? Maybe you can have, let's have one pending order and see what is going to happen. One last one. So I'm expecting the price might push aggressively to the upside, maybe. So set your stop loss down. Set your take profit up there. You can always have a trailing stop. So if it moves, then move that direction. But the first one was taken, didn't go quite far, hit a stop loss. All right. Ladies and gentlemen, I would want to say thank you. And let's take time to read the FOMC. Let's see how it goes. Let's speak another time. All right. Good night, guys. Bye.